Morning, everyone, and thank you very much for joining me. This is the morning market review. It is Wednesday, it's the 10th of January. My name is Russell Shaw, I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. Just want to apologize for the delays this morning. It just took some time to log in to the platform. I'm begging your pardon. Let's go ahead and take a look at our disclaimers. And I'm going to start off with the high risk investment warning. I'll just keep this on screen for a few moments, and I'll keep this on screen for you to go through. Hey Mia, good morning to you. Raj Matais, it's a pleasure. Good morning to you. All right, here is our market commentaries disclaimer. Hello, James. Thank you for joining and welcome. All right, and our references MarketScope 2.0 and TradingView.com. I'm just going to go through to TradingView live streams. This is what we're going to be using from next week. So I'm going to just pop the link in for you guys. All right, so you'll click on this next week from Monday. These are the upcoming streams. If I click show more streams over here, here's ours, the morning market review in 5 days. So that's from Monday. So we're actually going to be switching from GoToWebinar onto TradingView from Monday. So all right. Having said that, if there are any concerns, just email me. Let me just bring up my email address for you guys. rshaw@fxcm.com. rshaw@fxcm.com. So you can certainly email me with any issues. Let's start off now, go through to the real rate. And the real rate, I think, is a good point for us to start the analysis. It's really what is driving markets at the moment. So the stock markets, specifically the US stock markets, have priced in lower rates, okay? And we've been following the correlations with our instruments, and that introduces something very interesting, okay, in that if the stock markets have priced in lower rates, and the markets are looking for a cut in March, from March, if there is any sort of calendar events or announcements or news events that would push back on that, then we're probably going to see a sell-off in the market, in the stock market, right? If there's any news events that contribute to that scenario, then we're probably going to see some support for the market. So what we saw on Friday, the job market, that pushed back on the notion of a lower interest rate sooner. Okay, so I took a look at the what the market's expecting in terms of a rate cut in March, and we're looking at about 55%. That's down about 10 percentage points from a week ago. So we just want to watch it. Hey Kim, good morning to you. You can see, let's take a look at the US dollar, which we tend to look first, considering the real rate. So we just click on plus here, add the US dollar. And you can just see the correlations quite tight. Let's use an arrow. go. So as the real rate comes down, US dollar comes down. As the real rate has kicked up, okay, so has the US dollar kicked up. So you can see the discounting here is, yeah, you can see that the discounting is pretty strong. And you've got some sort of respite coming in, got some sort of respite in there, okay? And you could just see that the you could just see that the US dollar just coming off recent peak there as well. So again, I want to reiterate, the real rates is a key driver of the market. What drives the real rate is the news coming out with regards to inflation. We are going to get CPI data out this week, so we'll keep an eye on that. And we want to okay, I'm just taking a look at a comment from Mia. I'll come back to that in a moment. So the idea here is we want to see the news items that reflect the in the real rate, and from there we can pass out what's happening in the stock markets. Let's take a look at S&P and Nasdaq. So what we'll do is we'll just double click on US dollar, and we'll change this to SPX 500. What kind of correlations have here? So you can see as the real rate comes down, so the SP moves up. Okay, as the real rate moves up, so the SPX down. Starting to see the rate start to move down, starting to see SPX to move up. So again, what does that mean for focus? Our focus means that actually news events such as CPI, jobs data, that's all very important because that's going to drive the rates, and that's really what's driving the underlying markets. Let's take a look at Nasdaq just to see what kind of correlation we have there. Okay, so we bring in that in. All right, now you can see it's a similar type of movement. You've got the real down, got Nasdaq moving up. As you've the real rate moving up, so you've got the Nasdaq coming down. As you've got the real rate showing some sort of respite, so you see the Nasdaq going up again. So I want to just reiterate that we keep an eye on this real rate. Now, Mia, hey Howard, morning to you. Mia has given us a link direct to the review. I will post it. Thanks, Mia. I'm just a bit concerned because I'm going to be, it's not a fixed link. I don't think it's a fixed link. I'm going to be changing the link every day. So you'll have to go into that live streams and pick up the webinar there. Okay, so just be aware of that. Let's take a look at market scope and do some technical analysis here. So that the real rate is important. It does seem some respite coming in on the real rate side. Okay, if that's the case, we can see that the S&P 500 is moving up. Just go through to our daily chart. So what happened here on the daily chart? Okay, yeah, you're not going to get the usual notifications. It's going to be at 7:40 GMT currently, and you're going to have to go and click in on the link. It's not an automatic platform like GoToWebinar. we actually are piggybacking on top of TradingView. Okay. If the real rate continues to come down, we're going to have to see we want to see the S&P move to zone 1. Zone 1 is between the upper red and the upper blue. Zone 1 is between the upper red and the upper blue. So that's the next step. So it's important for us to see the S&P move up. There is something that is positive in this chart. Okay, so let's just remember, we've got this weekly chart showing an upwards trend. How do I know that? Well, I'm just using it relative to the 30-week. I'm using the candlesticks relative to the 30-week exponential moving average. The 30-week exponential average is pointing up, and with the RSI 50. So on the longer charts, there is an upwards pressure. Now, what we want to see is we want to see the candlestick moving to zone. But take a look. We do have a clue over here. We've a clue. Here is the reference candle reversal. So here is the lowest low in at least 3 candles. Then the candle on the 8th, which was Monday, really driving hard and closing above that high of the reference candle. So it does look as if we may have a turning point here, and you can see that the RSI has popped above 50. Okay, so it does look as if we're heading towards that zone 1. Again, I want to see the real rate come down. We'll have to double check. That the CPI announcement. Let me just double check when that CPI. I think it's out tomorrow. Let's take a look. I'll just bring that up in the meantime. Yeah, Howard, just send me an email. I'll respond to your email. Okay, we're effectively ending GoToWebinar. This week will be the last week on GoToWebinar. From next week, we're going to be on TradingView. We'll do all the webinars from TradingView. Okay. Yeah, James is confirmed tomorrow. So it will come out at 3:30 p.m. GMT tomorrow, 1:30 3:30 p.m. ZA, and 1:30 p.m. UK. All right, take a look and see what's happening on the DAX here. All right, just bear with me. System running a bit slow this morning. Okay, so we'll go through to the DAX. The longer term bias. The longer term bias is up, isn't it? We've got a price above the 30-week exponential moving average, the 30-week exponential moving average pointing up, and we've got the RSI above 50, right? Go through to the daily chart, and now we've got this tightening of the Bollinger Bands, and the tightening of the Bollinger Bands, okay, has come at a time when we're getting a reference candle reversal. There's the lowest low in at least a 3 candle cluster, right? They've got on Monday the conditions 1 and 2, okay, conditions 1 and 2 taking the signal to completion, and now we want to see if we're going to get some further upside. Okay, so you can see DAX does seem to have this perhaps upwards bias, okay, as long as we don't get a contra reversal signal. When I say contra reversal signal, I'm talking about a bearish reference candle. So here is your bullish reference candle. There's the bullish reference candle. And we want to make sure that the bullish reference candle moves. Okay, cheers, Raj. We want to see that. We want to make sure that the bullish reference candle effectively contributes to a push to the upside, to a movement into zone 1, effectively a movement between the upper red and the upper blue challenges. Okay. Now let's just take a dollar and go through to euro and pound, and that's where we'll leave it for today. Okay, so let's go through to US dollar. Okay, so the US dollar, interesting here. We don't have any reference candles here. So we're kind of getting this sideways movement. We don't kind of have the impetus that we do on the stock market side, but it's moved into zone 1. Okay, and the fact that it moved to zone 1 and we have above 50 does introduce a sense of ambiguity because the real rate does seem to be coming down, and we do seem to be getting some sort of movement away from this high on Friday. So the idea here is, okay, just watch where the candle is, and bring in the analysis with the real rate. The real rate to me seems to be coming down. If the real rate seems to be coming down, I actually think the dollar should be coming down here. So there's a bit of an ambiguity in here, and that perhaps because there's that ambiguity, maybe I want to stand aside until it clears up. Okay, let's just take a look at euro and see what's happening there. All right, so euro over here has slipped into zone 3. That's between the lower blue and the lower red. Again, my preference actually to be looking for some sort of support to come in here. Why? Why would I be looking for support? Because the rate seems to be angling downwards. If the real rate seems to be angling down, okay, then I want to get some sort of that we're moving up here in euro. My preference, just to stand aside at the moment. It's looking too ambiguous, too confusing here for me. Let's take a look at pound US dollar. All right, just bringing up pound US dollar, the last chart for this morning. All right, and pound just drifting sideways. Okay, pound drifting sideways. So there seems to be more directional sense on the equity side, on the risk side, and the currency side, a little bit of drift, a little bit of ambiguity. And because there's that drift or there's that ambiguity, maybe I want to be concentrated on something that's a little bit more clean. All right. That's as far as we'll go this morning. If there are any questions, go ahead and all right. All right, let's wrap up here. Matthias, we will skip US dollar Japanese yen this morning. We'll skip that. Okay, the currency markets are drifting. Okay, there's no the US dollar in of itself just seems to be misaligning with the real rate. Okay. All right, guys, let us wrap up here, and we'll give a we'll wrap up here, and we'll do it all again tomorrow morning. Thanks very much, guys. Have a great day. Cheers.